Hey everybody, my name is Matthew Sambanis. I'm a certified public accountant. My firm is based in Long Island, New York. And in today's video, we are going to discuss a new article that came out from CNBC called Black Friday Came Early This Year, Signaling Worries About Holiday Demand. And the importance of it is I don't think it just has to do with holiday demand. I think it has a lot to do with the overall economy, the real estate of the economy. It's going to also be a setup for what I believe is a rough 2024. We're also going to speak about solutions and what to do if you're, looking to get prepared economically for a worst case scenario. And we're just going to go through everything a little bit point by point. So first point is here. Early Black Friday discounts were far higher this October compared to prior years, a signal that retailers could be worried about holidays demand. Of course they are. Both the depth of the discounts and the total amounts of items on sale were higher in October compared to the last 4 years. So, long story short is the price of apparel, for example, is down, or the discount of it is up 9% year over year compared to prior years. And in 2022, it was 5% of a discount, and in 2021, it was a 2% of the discount. The caveat is it doesn't sound like a lot, but when you go from 2% to 9%, that's a 450% increase in the the discount ratio. And even when you go from 5% to 9% from 22 to 23, that's another huge increase in the discount ratio. So people are clearly worried because if you don't have to discount something, why would you do it? You want to make as much money as possible. And what do I think is causing this? A multitude of things, but I've made other videos on it before. Credit card debt is through the roof. Student loans are restarting. Personal and overall household debt is up. Government spending is through the roof. Everything that could go wrong is basically going wrong. And you can only plug so many holes with water that have water coming out until the dog hits the fan and you drown, right? So basically, massive discount increases in discounts are happening right now. And to kind of drill down into it, computers, the discount ratio is about 13% this year versus 5% in 2021. So that's almost 150% increase in the discount rate. Appliances, 6%. In 2023 versus 2% in 2021. Again, that's a 200% increase. That's just absolutely through the roof. Sporting goods are up huge, 7% in 2023 in their discount rates versus 1% in 2021. That's a 700% increase. So clearly people are cutting back on their shopping. People are completely burnt out. Having to spend $80 to feed a family of 4 at McDonald's is an issue, right? And everybody says everything is good. Bidenomics is great and this and that. And it's not great. Everything is crashing. Everything is through the roof. Granted, oil prices did recently come back down, but I also have a feeling they'll be increasing substantially. And everybody also thinks that inflation is coming down, which it's not. We're going to be doing an upcoming video on that. So, by the way, if you like this content, please be sure to like, comment, subscribe. We do videos on the economy, finance, how to make money, gold, stocks, bonds, everything of that nature, and more. So, again, please like, comment, and subscribe. I would greatly, greatly appreciate it. And, there's what's called the so-called holiday creep. And what's the holiday creep? That's when you walk into Costco, like I did this past September, and what happens? It's September, right? What do you expect? Okay, fine, maybe some holiday decor for Halloween, but not Christmas decor. Costco had Christmas decor in September. Yep, yeah, absolutely mind-blowing, 3-4 months in advance, absolutely unnecessary. But they want to, I guess, instill that in their customers' brains that it's time to go Christmas shopping, right? And let's go spend all of our money. So, which, by the way, let's not. But so the holiday creep keeps on starting over and over every year, earlier and earlier. And, Of course, CNBC cites, well, consumer spending fell in October, according to the new CNBC National Retail Federation Retail Monitor. Strong discounts during the month did fuel spending online, according to Adobe, which, yes, it did, right? I agree with them that strong discounts during the month did fuel spend online. Year over year, sales are up 6%, overall online, except the issue that credit card debt keeps on going up. So it's not the strong consumer. It's not even the consumer. It's all these credit card companies, Discover, MasterCard, Visa, who are eventually going to show big black holes or big red holes in, when they have to start accruing for all these losses on their balance sheet and on their income statement, because the consumer is tapped out. And if they weren't tapped out, they wouldn't go and spend $100 on their credit card, because once you spend $100 on your credit card, it costs way more once you're done paying it off with interest. And I think about 43% of people who have credit card debt are carrying it from month to month. So scary numbers. The economy is not in good shape. I hate to be doom and gloom, but it is what it is. And we're going to keep on trudging along this article. And we're going to also come up with some solutions on how to make money and what to do and what not to do. So again, actually, as I just noted, online sales grew nearly 6% to 76.8 billion compared to last year, and was fueled by deep discounts and uptake in buy now and pay later use. So I wonder how much of this is actually inflation, or quote inflation, right? I got to tell you, my example that I like to go to is rock wool. It's insulation, high-end insulation, noise cancellation, fire resistant, water resistant insulation for your house. It's all in these walls here. I bought it instead of the pink insulation because that's utter crap, and it does a great job, and I just listed out all the reasons why. Before COVID, it was $30 a vat, or a bag if you'd like to, call it by its simple name, right? It's now $80 a bag. There's no way that it went from $30 to $60 to almost $90 due to, quote, inflation, right? A lot of these this is all based on greed. All these executives are pulling in higher and higher salaries, higher and higher stock options. It's through the roof. Case in point, not that I agree with it or disagree with it, although if you're going to ask me, I generally disagree with it. The UAW pointed out how Ford and GM and all their executives, all the CEOs and CFOs are making, 35, 45% increases in their salaries on 30 million. Now they're going up 36, 45 million. God only knows. It's psychotic. I don't want to say it's wrong. I also don't want to say it's right. But at the end of the day, you want to attribute that to inflation. It's not. It's going into people's pockets. And when this blows up, and it will, and Ford and GM have to go bankrupt all over again, they deserve it. Sorry. So anyway, continuing on, both the depth of discounts and the total amount of the items were on sale during October also came in higher than the last 4 years. And of course it did, because people are tapped out, right? You're too sick and tired of paying all that money you spent on oil in the last few years, all that money that you spent on food. You're tapped out, and what's happened to regular wages? They've barely moved, and they've barely moved because the economy is not good. Bidenomics sucks. Everybody knows that. Not that Trump was that much better, not to get into politics. Everybody says Trump was the greatest, but he also grew out some of the largest deficits in history. I'm sure Biden will pass him, but he increased the deficits more than any other president in 4 years, than any other president in history. So when I look at how a president did, how much did the debt increase? Through the roof. And that's a huge issue. So going back to this article, because it's a little repetitive, during October, discounts were on average as high as 24% for apparel, homewares, electronics, toys and games, sporting goods, compared to 16% in 2019 and 13% off in 21. On average, 8% higher. So basically, in 1 year, you discount it by $100, you knock that off by 12, 13%, then it's going to cost $87. Now you're going down from $100, 24%. Now you're going down to $76, right? That's a huge increase in that discount. And clearly these companies are worried, and they're selling it online. And shipping's going through the roof, by the way. These new UPS contracts that also just came out are going to cause a massive amount of inflation. Yeah, and I'd say I don't know what to do, but I do know what to do, but we're going to get to that at the end of the article. I'm sorry, this is not clickbait. It's just how the format of this is going to go. So anyway, bad times ahead. The early and steep discounts, which are expected to reach records high this holiday season, aren't necessarily a harbinger of economic times ahead. CNBC is stupid. Yes, it is. The credit card debt is a sign of tough times ahead. The student loan debt repayments are a sign of tough times ahead. The highest in history of car payments over $1,000 are a sign of tough times ahead. The deficit that the government keeps on blowing out day after day is a sign of inflation and tough times ahead. It's not going to be a pretty picture here. So, and then of course it defaults to in 2021, consumers were flush with cash from stimulus and supply chains were snarled, which created a classic case of high demand and low supply that caused prices to rise and promotions to fall. When you're not spending your money, you don't really care how you spend money, right? And so if you go out and earn $1,000, you're not going to necessarily care about how you I'm sorry, I take that back. If you go out, you spend you earn $1,000, you're going to be very careful and frugal with that money. Versus if I gave you $1,000, you're going to spend it just like that. And that's exactly what happened with all the government money that the government gave out in the form of stimulus checks, unemployment, and PPP loans, and EIDL loans, and everything else that they did. So basically, long story short, is 2021 consumers were flush with cash from stimulus. I agree with that, but again, they didn't care. When it's your money that you didn't work for, it's much easier to spend it than versus it the other way. What else? All right, coming to the summation here. TJX, who owns Marshalls, who owns Home Goods, and also Gap. I take that back. TJX, who owns Marshalls and Home Goods, and a few other offbeat retailer discounts, they came out and they were expecting a strong holiday season. Why is that? Because they've always sold their products at much below retail, at a discounted rate. And they've done it consistently, they've done it fairly, and they've done it honestly since I was a little kid. As a matter of fact, I used to own stock in TJX. I may buy it again. But at the end of the day, they're expecting strong holidays versus Walmart and Target, who came out. Walmart is leaning heavily into promotions. Target, on their conference call, mentioned value 17 times. Target is toast. They also have other issues going on there. I mean, ultimately, over the long term, I think they're a great investment. I think that they're going to make a ton of money. They're going to continue to make a ton of money regardless. But at the end of the day, Target's prices are high. I was there a few weeks ago. Very expensive, and the quality is utter crap, to put it nicely. And in summation, it goes on to summarize, if deep discount is what's fueling holiday spending, trend that began to pick up last year, as consumers are going to get accustomed to promotions, and some retailers could find themselves struggling to convince them to pay full price, there's going to be a really long-term problem here. So a simple analogy is, when I was a kid, and maybe up until even a few years ago, it used to cost $1, maybe $2 for a cup of coffee, until Starbucks came along, and now it's $3, $4, $5, $6 a cup of coffee. But even when I walk into 7-Eleven, it's $3 for a cup of coffee. It costs 10 cents to make a cup of coffee, 20 cents at the high end with the cup of coffee, with the actual physical cup. As to how this is so expensive is beyond me, other than the fact of inflation, and people are too reliant on outside services. And if we want prices to come down, then you need to stop shopping. You need to start saving your money. You need to start earning, you put your money to work for you, have your money earn interest, have your money earn dividends, and practice frugality. And then once that happens, these places will have to lower their prices in order to lure customers and clients back in, which is what's happening at some of these bigger places right now. And, the solution here is the solution, if you don't want to get crushed by inflation and by lowering prices, well, you can buy into the stock market, which will continuously, unfortunately, go up. It will, and I don't say that unfortunately, but it will continue to go up. It will also come down, and it's going to be a rocky road up and down. I personally recently bought gold and silver. I plan on buying more. I plan on buying inflation-resistant investments. Case in point, Alteria, British Tobacco American, both of which are yielding over 9% in dividend yields. They have foreign currency exposure. I own a ton of both of them. Buying investments abroad in foreign stocks, I also happen to like a lot, and buying tangible assets as well as, like I said, intangible assets, but that are going to go up in a high inflationary environment. So right now we're talking about deflation, but ultimately the way the government is continuing to spend money freely like drunken sailors and everything else, the answer and the solution is buy precious metals, buy physical assets, but also buy abroad. The problem here is as we get more and more debt, the dollar is going to go down lower and lower, and the less your dollar is going to be able to buy. So get foreign currency exposures, save as much money as you can. Cash is king. Stay out of debt. And on a moral, personal level, just do the next right thing. That's been my experience. So just do the next right thing, and the next right thing seems to happen. So anyway, if you found this video and you watched it until the end, if you found this video helpful, please like, comment, and subscribe. If you watched it all the way through, I am super grateful and super appreciative. And if you'd like me to do a video on anything else, please leave it in the comment section. Thank you, and have a great day.